everyone. Good morning. All right, very good. Frankly, it's 10:18. I had no idea that APIs were so popular. I'm quite frankly shocked. The title of the panel says it all, but I'm sure that we'll dive into interesting things. And without further ado, I'd love for each one of you to introduce yourselves, what you do, and then we'll dive into the conversation. And please, start us off.
Hi, good morning. My name is Yoshi. I'm from the company called Alpaca as an animal. We're a Silicon Valley-based tech company. We're building API for US stock trading. We are a FINRA registered broker-dealer, and basically we provide focus on building API to enable people to offer the US stock trading.
My name is Todd Clyde. I am the CEO of Token. So I've been in the software industry for 34 years. Token is my 5th startup. I've had successful exits on the previous 4. 2 of those were in digital channels. So I was first involved in internet banking from 1998 to 2005, and then I was involved in mobile banking 2008 to 2013. So I thought API-based banking was the next thing that I should get involved with. So Token, we provide a software platform for open banking, and that means we provide software for both sides of this ecosystem. We give an API platform to banks to comply with PSD2, and an API platform to create commercial propositions to market. We also act as an aggregator, like you hear of many of them, where we've aggregated access to 2,500 banks across Europe, growing in 18 countries, and we give developers a great, the easiest way to embed an app embed a bank into their apps. And we're kind of uniquely focused on payments. We think the real disruption in open banking is going to be in payments, as it's going to drive a shift from card-based payments to bank-based payments.
Hello, my name is Barbasura. I'm CEO and co-founder of Saltage, and we provide an open banking solution for both third-party providers, so act as an aggregator to get the access to account information and payment initiation flow that is provided by the banks, supporting more than 3,800 financial institutions worldwide. And as well, we help banks to open up dedicated APIs towards third-party with TTP identification, strong customer authentication, and dynamic linking. Thanks.
Hello, I'm Clément Coeurdeuil. I'm the CEO and co-founder of Budget Insight. We are known as the leaders for financial aggregation in France. But we like to think that our job is mainly to build a bridge between the usage and the financial services. So what I want you to remember is that we are a financial aggregator, but we want to go from the financial aggregator to the platform of APIs for financial services to be able to enable the usage with financial services. This is really what we want to do. We started the open banking era with the aggregation for the bank account, and now we think that this will evolve for any kind of financial services inside the other apps other than the banks. This is what we want to do.
All right, thank you, gentlemen. Who knows what an API is here? Come on, you guys are lying. You have absolutely no clue what an API is. Who has developed an API? Who has worked with an API? Ooh, so lots of them. That's why you're here. You're all geeks. All right. I'm not sure that I know what an API is, frankly, and I don't think that I've seen many in the wild. So, a very simple question, maybe deceptively simple. Why are we here talking about APIs? Why are APIs so important in the financial services industry? Who wants to start us off?
I'll start on that. Because it's about meeting your customer in the apps they already use. So this is when I was involved in internet banking and mobile banking, and as you just heard on the previous panel about a digital bank, that was about extending the brand experience into the digital channel. That was about building the customer relationship. So that was about relationship banking. APIs are important because digital natives are spending their lives in other apps. And APIs is about delivering your financial services into the apps in the context that your customers are already using. So it means banks have to move from that relationship banking aspect to a more ecosystem banking, where it's no longer about bricks and mortar, it's no longer about clicks, it's about links, it's about being accessible. So that's why we're thinking about, we're talking about APIs, is it's following the APIization of the world and meeting your busy customers in the apps they're using.
Anyone else?
Yes, I'd like to emphasize that. And I totally agree with my colleague. You know, we're basically almost competitors, but I really like good competitors, so that's okay for me. Yes, I totally agree. I think, you know, we really need to meet the need of the user inside this context of usage. And in fact, the API is just the technical response to that need. Really, it's the only way to make to build a bridge between a service and another. And so, and you know, you already use a lot of APIs today. When you do the one-click payment of Amazon, it's an API directly connected to the payment system. So when you use you know, Uber inside Google Maps, you have Google Maps and you see the little Ubers inside Google Maps. You're using the API of Ubers and Google together. And it's really that idea that the user is inside his Google Maps because this is his usage. And Uber says, I'm going to reach him wherever he is to be able to deliver him the best service possible. And the API is really this response, being able to put your service inside where the user is.
Yeah, so I think like in addition to basically great rebundling of the fintech services and as well as embedded fintech theme, I think what I also need to add is the basically evolution of the developer community. And that's why I think this whole API world is like, you know, getting hyped like through Plaid, Stripe, Twilio. Basically like there are more and more developers in the, you know, ecosystem of the startup and tech companies, and they have more decision-making power. So making sure the API is the right interface, not mobile, not web. API is the interface for the decision makers. That's going to create actual integration and so forth. And I think I really want to emphasize that coming from the Bay Area side.
You good?
No, we are using API from the beginning. Like every computer is talking with another device via API. In some kind, it can be network API, it can be different size of API. And what we are right now discussing, I think, in regards to open banking APIs, because we are moving from screen scraping, from mobile APIs, to some more transparent interconnection between third parties and banks themselves.
Allow me to play the skeptic role here. I'm getting us back to the title of the panel. It's an API world. It's a present tense, if my English is correct. And I would say that actually that's incorrect. I mean, we may be moving to an API world. I don't know how long that's going to take, but everywhere I look, apart from maybe in payments, in certain parts of payments, right? Everywhere I look, I see manual processes, I see data exchanges, I don't see services that present data or data sets between groups of people, departments, and so on and so forth. And you know, with my introduction, I mean, with the point that I'm making on payments, you know, financial services is a huge industry. You're in like trading and capital markets and so on and so forth. I'm not sure that there are many APIs that are out live in this industry. I don't know if there's that many in the insurance world. I'm sure that I can hit on the insurance world because there are not that many insurance people here. So it is not an API world. There's a reason why banks or financial institutions are not Amazon or not, big tech companies in general. And so to me, the question is, we may be going towards that shiny path and that shiny house on the hill, but it might take a long time. So maybe you're like hyping your respective books and hoping that the future is like, you know, much closer to us. But I'm basically saying it's not. And there might be a lot of friction to get to an API world. So am I too negative? Come on.
Yes, yes, I think you're right. We're not, but you know, it's our job. We to make the world to realize our vision, and it's not acceptable for me that you need to sit 1 hour in a chair to get your credit. You know, to get your loan. It's not acceptable. You know, I just give you a little story that I lived. I wanted to buy a TV. You know, I had the cash for the TV, but I thought it would be nice that I would not have a big hole in my bank account to pay my TV. So I will go to the it was Fnac, you know, they have Fnac loan store, you know, and I asked, please give me a credit for, and it was with I don't know the name, one of the big credit companies of France. Please give me a loan for my TV. And they say, okay, no problem, Mr. Coeurdeuil, and I see you are a quality client, so we will do that. And he starts to ask me questions and to fill the forms. And I ask him, but what are we doing here? You know, how long is it going to take? And he tells me, you know, only 30 minutes to do the application, and then we will send a fax, you know, with a fax machine, and we will wait for human to take the decision if you can get the loan or not, and it's going to take not more than 2 hours. I said, 2 hours of my time? Can you imagine? I'd rather have a big hole in my bank account rather than wait 2 hours to get a loan like that. So from my point of view, this is not going to stay the same. It's not possible, you know. They are, because even the loan company are losing so much money. I'm a good client. I should have get my credit, and it was not possible because I had to wait so long. And so, from my point of view, it's not because we are not there today that we will not go to this API world. And the API world is the only way we can make the user experience fluid as it should be, and to get to distribute as many loans as you can. It's for loans, but it can work for any type of financial service, of course. As many loans as you can, and the cheapest way, because when you erase the fax machine and when you erase the human process, you do more loans and in a cheaper way. So it's you know, it's like a Darwin solution. It's obvious, but it's going to be long because there is a very big inertia, because the system wants to stay the same, even though the solution is obvious. So our job is to make this obvious solution come true.
Yeah, so
We're going to get back to that, but
yeah, I think like I want to talk more of the like macro theme. Like, you know, API has been there forever. It's just an interface for the programmers to interface and interact with the applications. But like, I think the reason why now everyone's excited about API is also thinking about how, you know, the people were used to use the install software, and that was really expensive upfront cost, and then went into the cloud software that is subscription. You still have to bundle services that, you know, you're using something that you don't need. And now API is like in the form of the usage where you're just using something that you only need. And I think that's a very big difference between, like, you know, API world and non-API world. And I think that, like, you know, API has been there all the time, but like, you know, how the upfront and, like, you know, startup cost of doing something or trying out some services has been very, very small. And that's, I think, the great thing about API world, and it's actually happening as of right now, in my opinion.
So I would agree, Pascal, that it is not an API world yet in financial services, but that it is happening. What's fascinating and that we're all a part of is, for the first time, an entire industry has been mandated to create APIs. So in Europe, we're going to have access to 8,000, 9,000 financial institutions. So that's going to start it. That's going to absolutely be the catalyst. The reason it's going to go slower is, unlike these developers that can just hack away, this is a regulated activity, and this remains the biggest barrier to adoption by the developer community. It's open banking, but it's open only to regulated entities that go through a very rigorous regulation process, you know, subject to ongoing reporting, et cetera. But it is going to happen. So if you think half the payments in the world settle over card networks and half the payments in the world settle over bank networks right now. But when you go to e-commerce and in-store, that skews to 80% card-based. Why? Because it's impractical to pay over the bank rail, because you've got to log into your internet banking, set up a beneficiary, set the payment. Once that is accessible through APIs at point of sale, we're going to see a dramatic uptake and dramatic shift in payments volume.
Yes, in regards to comparison between banks and Amazon, Amazon is unique. And what is open banking and APIs right now with PSD2 force every bank in Europe to be the Amazon, and it's not possible.
Thank
Because
God.
every bank can be an Amazon itself, so they can provide the same quality of API as Amazon. They can be unified APIs. There is different destruction in the user journey during payment initiation flow, in consent collection, and so on and so on. But market evolves. It will be fixed. Maybe not so fast as we had expected. Maybe not yesterday, and maybe not tomorrow, but day after tomorrow.
Clément, I'm going to use you as a foil because you. I think that the position that you staked is quite an extreme one, at least for me, right? So, instantaneity and removal of any type of friction. You want financial services at large. You said lending, but let's any financial services instantaneous, whether it's retail or maybe anything else. And I would say that if you have the right APIs, right, technology companies, Amazon have shown us that things can be done that way. I think that you had like an efficiency point that you made, and you probably the four of you are in agreement as to what real APIs, with the right standardization and so on and so forth would bring. I would posit that there are unintended negative consequences to anything instantaneous all the time. I would posit that some big tech companies are not particularly positive forces for societies at large. So is that really what we want for financial services, given that we have so much pain in other parts of our lives with those apps that are ruling us and manipulating us?
This is a really interesting question. In fact, I think it's a good question, but it's the wrong way of thinking. What is really important, and what you touch here, is that the company who will make this possible, this instantaneous user experience to get anything you want if you have the money and you have the right profile. They need to have the regulation to see if they have the right values. They cannot do anything they want with that data. This is very important. So, but once you create this set of rules, of regulations to make sure that they don't do bad things, evil things, to quote Google's with your data, the data should make the world much safer. Once you have instant access to all of the user financial data, you can instantly know if he can get the loan, if he can use this financial service, if it's the right price for him. Because it's more accurate. When you want to have a financial service, and for example you're a company, you give your last financial statement of the last year. And if it's a good one, you get your financial service, even though you might not be in the right place to get it now. And it's the same in the opposite situation. You have a bad year last year, and now you have a good year, and you cannot get your financial service to your bank because they are looking backwards. They are looking it in the wrong sense, and so this instantaneous way of getting the data and processing it through the APIs allow us to, if we make it right, to get cheaper service and better service. In my opinion, if we have the right regulation, but the regulator needs to change his way of thinking, and the regulators need to get this idea of tomorrow we will process instantaneously the data, and we need to make sure that the people who do that cannot do bad things. This is really, but it's going to happen anyway. So, and I think we want that because it's the cheapest way and the best way to get that. You don't understand maybe how many people cannot access so many financial services today. There is a great company that I like. It's called Compte Nickel. And I will stop there. And Compte Nickel allows people who have very low income to get a bank account. And banks didn't want to do that. And so a lot of people did not have access to bank account because they had not the right income. And digital and APIs were able to allow them to get that.
The rest of you in agreement with Clément? It's all upside, even if it's instantaneous?
No, I think there's negative consequences to this. Let's not forget the justification for PSD2, especially the Competition and Markets Authority, was to increase competition for banks, makes them work harder. So this basically is giving more fuel to the new financial layer that's competing with banks. So this is giving more fuel to the PayPals and the Venmos and the Alipays and the Klarnas and the Affirms, et cetera. So, and banks have to service these for free. So, I think banks will become a funding source or will become a server of this information, or they've got to figure out how to compete in this new financial layer by aggregating and distributing new products and capabilities themselves. So yeah, I think there's huge potential negative consequences.
And it's strange, but PayPal has an API from 2000, and it was not regulated and provides the same functionality as right now with account information and payment initiation. Google has API, it's not regulated, and everything is working more or less fine. Amazon has API, it's not regulated. And regulation facilitates innovation and so on, but as well provides additional borders, additional requirements, and so on top of a lot of fintechs. We have faced it, and even it's different reaction from banks. So if we're acting as a third-party provider, we raise some issue with a bank, it can be no reply for months. But if it will be our client acting as a, like bank is acting as an TTP, it will be fast reply. So it's a strange situation.
Well, I think it's just how it is and how it should be, because in terms of financial services, most of the things are not very difficult to differentiate. So any process should be automated, any process should be optimized, and I think that's how it is to be API instant, and for the users it's better. So I think that's how it will be.
I hope not. All right, so let me double down on this, right? I take the analogy of big tech firms, social media, big marketplaces. It seems to me that certain types of technologies, and APIs being one of them, is a huge enabler of market power concentration. Market power concentration, right? And kind of like winner takes all paradigms. And it seems to me that we as a society and as a polity do not want winner takes all and huge market power concentration in financial services. Yeah. Let me finish. And we already have some market power concentration with large banks that are dominating, right? So that kind of frightens me to no end, and that gets me again to the point of the technology aspect is one thing, but governance and trying to mitigate unintended negative consequences in an API world tomorrow are actually extremely important.
Yeah, so I think I agree with that danger of the the one man takes all kind of thing, social media, Google. But I think what's really cool about financial services is that because it touches every single person on the earth, it's so hard for one person to take everything, because each of the person and business has a different appetite, different needs, which means you need different type of the experience. And I think that's what's happening. This fintech boom, last 5-10 years. I think in the U.S. Robinhood came out. Everyone thought it was a red ocean to do the broker dealer, but Robinhood did it in specifically focused targeted markets, and the new market was born. I think that's going to be happening everywhere in the world, in the specific region, specific targeted market, and that's how we do specifically developers, and there's a market for that. So I think I also fear about one man takes all. I'm very optimistic about it's not going to happen in financial services because it just touches every single person on the earth.
I do not agree with you. Because I think in the end, one big challenger will. It's easy to cut the competition. You just have to buy your competitor. If you are 10 times or 100 times bigger, you can buy it. So in the end, I think there will be a winner takes all for everything, and especially in financial services. But what is the trade? Let's say the government or the regulators say we don't want that, so we cut. And we say it's not possible to have a monopolistic position on a certain type of financial services. And what is the trade for that? You might trade a very a lesser good service. This is the trade you might call. For example, you don't want to give your data to Google, but Google is cheap, is fast, is great, and so you want to forget about Google just because you want to take some French solution, but it's really, really bad compared to Google. So in the end, the regulators and the governments will need to make a trade. And I think it's an important trade. And I don't have the solution, but the trade is real. The trade is, do I want to have the best service, and the best service that is always better, always bigger, always cheaper, and more complete? Or do I want to not give a monopolistic situation and have a service that is bad? And I think it's a very dangerous, and I don't have the solution, but it's a very dangerous way of seeing things, because in the end, the monopolistic situation will keep growing, will keep being better, and you will not be able to get that value because you don't use it. So it's a very complicated solution.
I do not believe there's a risk of market power concentration on the data use cases. I do believe there is on payments. So on the data use cases, again, for the lending, the risk scoring when applying for a loan, there's hundreds of thousands of lenders. They all need risk scoring. They're going to go directly to banks. PFMs, we're already seeing personal financial management tools. We're already seeing a proliferation of personal financial, a democratizing of visibility of your data. But on payments, what's fundamentally happening is we're providing access to a cheaper network. And so there is, and there's the regulation has lacked the necessary bumpers, the necessary controls. So there is no consumer protection around these types of payments. So number one, there's a huge economic incentive for merchants. And so the big guys, Visa buying Plaid, MasterCard has bought VocaLink Next, MasterCard has launched an open banking proposition that token helps power for them. But and there's a big void around who's going to manage refunds and consumer disputes. So I do think you're going to see some large players emerge there. And the exact problem the regulators tried to solve might perpetuate. So not in data, yes in payments.
Let's switch gears a bit, right? So you've convinced me it's going to be an API world, right? You've convinced me it's all great, and there's a few unintended negative consequences, or we can mitigate them. For any new technology to fully take over the ecosystem in which it bathes in and operates, you need to have a certain level, or the right level of maturity for all the actors that interact with that technology, right? So those that consume, those that the APIs, the financial institutions, those that build those technologies, right? Probably different levels of maturity, and in the technology itself, in terms of like the types of standards and frameworks and best practices and so on and so forth. So I'd love for each one of you to kind of like give us a color of where we are on a maturity grid and where we're going, or what are the things that need to be upgraded in order for implementation to happen at pace.
Sure. Let's start with the UK, because the date for the UK large banks to comply was January 2018. The date for European banks to comply was September 2019. So the UK, 50% of the banks missed the deadline. It took 9 months for data APIs to stabilize, 15 months for payments APIs to stabilize. There was a lot of stating about the lack of maturity of the market. It's never going to happen. But now you've got 260 third parties registered, you've got over 1 million users, you've got over 240 million transactions a month happening. Payments are starting to take off. Now let's look at Europe. So Europe, we benchmarked on September of 2019, only 77% of banks had accessible sandboxes, 50% accessible production, and only 30% were operational in production. So we're going to go through a stabilizing period. And so very immature period of time. And the biggest constraint right now to the uptake of this is the stability and the quality of the APIs. But I think we've seen the pattern set in the UK. We're going to see the exact same thing happen here. Banks will come online, it will stabilize. Third parties are registering at quite a fast pace. We'll see them connecting, and we'll see transactions start to dramatically increase.
So from our experience, is more or less as we're talking, the quality of APIs, the user journey, feedback, availability, especially for payment initiation. So everyone expects that if you would like to pay, you should do it 100% at any moment. And nobody expects that you can pay with credit card or with open banking stuff or something like this, just because there is some unavailability on your bank account or your bank is not available to authorize the payment. And to make things improve, this should be solved as well, especially for payment initiation, because like for account information, you can try again. But for payment initiation, we will abandon the process and switch to alternative payment method like credit card or cash.
Anything you want to add?
Yes, I think I totally agree with you. I think it's just the beginning, really the very, very early beginning. And it's kind of like of what happened for the internet. You know, for me, we're almost in the same. And we might have, a bubble for financial service in APIs also. But in the end, there was the internet bubble, but there was Google, Amazon, Facebook. So this is just the beginning. It's going to happen, but it's going to be long. And I think there are two major obstacles to the quick evolution. The first is what we are living now, building the new infrastructure, the infrastructure of the future. This API world, which does not exist today, and I agree with you. And we need to build it. And this is going to be very long because when we build it. It doesn't work the first day or the second day, and you need to get maturity on that. And so this is the first obstacle, so it's going to be long. And the second obstacle, and I think it's the biggest, is the shift we need to have in the culture of the old actors, you know, the banks, the banking industry and the insurance industry, who are very, very big actors, and they really, really don't know how to place themselves inside this new world, this API world. They don't know how to monetize the data. They don't know how to monetize and to distribute their financial services inside this new world. And this shift in culture makes that they don't have the right people to do that. They don't have the will to do that. So this is the other obstacle we have. So the era of maturity for the API world inside financial services is going to be in, I hope it's not going to be in a few decades, but it's going to be long.
I think it's really just started it because, like, I come from probably different background as we see, like, investing product. And so I see more of like embedded fintech theme, like Uber Cash, Uber credit card, and the Apple card. And like all those things will be adding those other, financial service products. And that's happening, started from the, China, WeChat, and, Japan, Line, Korea, Toss, and, everywhere that's happening, but still only those big players only. And there's like, 180, countries out there that's waiting to add those things for every daily software services, adding those financial services. And we are very, very, very beginning of that's happening. And in order to push that whole economy to happen, player like us have to exist.
Are there bankers in the room? No one works with a bank? No one is willingly...
No banker?
No,
willingly wanting to say that they work for a bank? That's someone like raising their hand. That's a banker. I mean, in your opinion, if banks were not forced to use APIs by some type of directive, would they willingly, use those? That's it. They want to like keep things to themselves. It's a rhetorical question. But I mean, a couple of the comments that you've made were like, yeah, they're not really ready, and it's like a new world.
There is no need for them to move ahead.
All right.
It's regulation. Why they should open up the doors, potentially for new products that is better than their own products? Why? Why to do it good to help your competitors? So it will be a journey, because in any case it will be disruption. Somebody like Revolut, for example, will provide some good APIs. Some other vendors like Monzo, for example, provide good API because they're thinking about their customers. So let's imagine if a bank do not have a proposition or do not have a quality product for a customer, why to forbid his own customer to use some other application that provides good service for him and so on? For bank, it may be a way of partner and maybe even copy or acquire this company or this product.
All right. One second. We have a couple of minutes. I'd love to get questions from the audience if we haven't bored you to death. So, yes, this gentleman. Could we have a microphone?
Yes, please.
That's an easy question to answer.
Well, I think it's retail and corporate initially because you've got the uniform, ubiquitous access to banks because of PSD2, and that's not been mandated on the corporate side. I do like what Swift's doing. Swift is getting out in front, making a lot of APIs, making Swift better, checking the status of the payment through APIs. Swift is also becoming the advocate for a number of standards to help banks compete in this new financial layer. They're advocating API standards. So they've just specified an authorization API where banks can charge and make money for it. They've also specified a pay later API. So Swift is trying to stay relevant in the API world. But yes, I think once you've got easy access to pipes between banks, I think those legacy connections are ultimately going to be at risk as well.
Question up on the first row.
I think they can do
You could.
It's a very short question. It's a very short question, but my question is, what would you expect or love to see from PSD3?
All accounts. All accounts, like not only payment accounts, because for example, for lending use case, lender would like to know what you have as mortgage, as investment, maybe some other loan. And right now it's not possible. So right now to get this information, it's only possible to be done via screen scraping. And there is a real use case, real pain. And it should be no limitation in regards to amount of the data that can be provided by the banks, just because it's the same data. It's different names of the data.
One last question.
So you said that APIs enable you to offer easier solutions, but what do you see an issue about the trust and the security of the data transfers? Because easy is one thing, but consumers are also quite worried about how secure is my data if I use this API, that application. And I think the bigger this ecosystem is becoming, the more complex it becomes, and the more leakages are possible, right?
Yeah. Yeah, you know, new technology, new usage mean new risks. This is and I think it's the role of the new technology like us and the regulators to discuss, to have a discussion and say, okay, those are the new risks that these technologies and this usage imply, and how are we going to mitigate those risks? So and the regulators, I think, is starting to understand how much he must evolve in this new area, and it's always the trade. You know, if you want the perfect security for internet, you just cut the electricity. But you know, in that case, you don't have internet. And it's the same for the new usage. If you want the new usage, you have new risk, and you need to find new ways to mitigate those risks. I'd like to end with a big warning for my fellow financial services providers, and especially the banks. I think, you know, we talked about Apple and the Apple Card. We talked about Amazon and Uber with the financial services they want to provide. And I'd like to say, if you don't want to go in the API world, if you choose to trade it and to say, I don't want to go there and I want to go slower, you might not be the one who is the winner who takes all. And somebody is going to take all, and somebody is going to get bigger, very, very big in this API world. And the question is, what kind of ticket do you want to take? Is that the one of I might have a chance to be the big one, or am I going to die in this new world? Because it's an era of disruption, so you need to choose where you want to stand.
On this note, on this warning, our time is up, so I'd love for you to join me in thanking our panelists.
Thank you
Thank
all.
you very much.